Good morning. I'm Peter Milios from the Finance News Network. The S&P 500 closed near the flat line on Tuesday as investors analysed the latest bond yield moves and corporate earnings season gains steamed. The broad index slipped 0.01%, while the Nasdaq Composite slipped 0.25%. The Dow Jones Industrial Average added 0.04%. The 10-year US Treasury yield topped 4.8%, reaching its highest level since October 6, when it traded at 4.887%. The move followed retail sales data that came in hotter than economists surveyed by Dow Jones had anticipated. Rising yields have pressured the broader market in recent weeks, as traders assess the prospect of tighter Federal Reserve policy for longer than expected. Investors have also considered the potential impact from the Israel-Hamas war on the global economy. To be sure, a solid start to the third quarter's earnings season is helping ease concerns somewhat. Bank of America advanced more than 2% on the back of a better-than-expected report. Bank of New York Mellon climbed nearly 4% after also beating analyst forecasts in the quarter. Beyond earnings, chip stocks including Nvidia and Advanced Micro Devices struggled in the session after the US Department of Commerce announced plans to tighten restrictions on sales of advanced artificial intelligence chips to China. And swap contracts tied to Fed rate decisions showed traders are now pricing in a roughly 60% odds that policymakers will raise interest rates by another quarter percentage point in January after holding steady in November and December, according to Bloomberg. Turning to US sectors, mostly closed higher overnight. Materials was the best performer, whilst tech was the worst. In crypto-related news, Israeli law enforcement authorities have ordered dozens of cryptocurrency accounts to be closed and seize millions of dollars worth of crypto coins as they step up long-standing efforts to cut links between crypto markets and Hamas after its attack on the country. In commodity-related news, prices for essential battery materials including lithium, cobalt and nickel have sharply fallen this year due to reduced electric vehicle sales in China and increased supply. Lithium prices are down nearly 70%, nickel prices have dropped 40%, and cobalt is in oversupply with prices near record lows, driven by China's slowing electric car demand growth, which had doubled in nearly 2022, but has since slowed to a 25% increase this year. Continuing on the lithium front, China's growing investments in South America's lithium resources, especially in the lithium triangle of Argentina, Chile, and Bolivia, highlight the hurdles for the US in challenging China's dominance in the crucial battery metal supply chains. Chile's recent $233.2 million deal with Tsingshan Holding Group for lithium projects reflects this trend, as the US encourages global electric vehicle manufacturers to increase production in North America and secure essential minerals from sources beyond China. Swiss mining company Glencore will close its Mount Isa copper mining operations by the end of 2025, causing around 1,000 job losses. Nevertheless, the company will keep its copper smelter in Mount Isa and Townsville refinery operation through the third-party work to ensure profitability, whilst its zinc operations in Mount Isa will remain unaffected as part of its cost-cutting efforts amid economic uncertainty. Germany has permitted France to use state subsidies for its nuclear power plants, ending a long-standing EU electricity market dispute. Energy ministers in Luxembourg reached an agreement enabling France to support its state-owned nuclear facilities despite objections from Germany, Austria and Luxembourg over potential competitive advantages and historical opposition to nuclear power. The SPI futures are pointing to a 0.3% gain. Thank you for listening.